Good evening. This is the Minance Podcast. This is the first of its kind. It's the first time we're trying something like this. The format's pretty simple. We're just going to introduce a topic that people may want to hear about. We're going to talk about it. Sometimes we'll debate it. We'll see how that goes. Today we're going to talk about emergency funds. It's a pretty self-explanatory thing. It's a fund that you have for emergency situations. And we came across this article on this retirement blog about the advantages of not having a retirement fund at all. Absolutely no money. So we're just going to go through that, discuss the pros and cons, and we'll see how it goes. My name is Sandeep. I'm here with my colleague Ishan, and he's going to tell you what he's going to talk about.
So as Sandeep mentioned, we're basically going to go on a quick discussion about why you would potentially need an emergency fund versus why you wouldn't. When I read the article that Sandeep just spoke about, there's a lot of good reasons that you do need an emergency fund, basically money that is liquid and stashed away for a rainy day. There's no real context under which you could say that yes, you absolutely need an emergency fund, or no, you absolutely don't. But I think that context is important because it splits up the groups of people who potentially do need a fund like this and those who don't. So when I started thinking about people who would need an emergency fund, I started thinking about all the risks associated in the Indian markets, things like unemployment, lack of an education. But then I realized that if you're talking about people who either need or don't need an emergency fund, it's only those people who do have disposable income at the end of the month to begin with. And that, in a country like India, essentially cuts your entire sample size into half. So my first argument against having an emergency fund for certain people is that before you even start thinking about saving money and putting it away for a rainy day, the first thing you need to do is clear any kind of debt that you have. For example, if you're scared that tomorrow you might get into a car accident, even if it's not that serious an accident and you need about 10,000 rupees to fix your car, and you start saving that at the end of every month. But on the other hand, you have credit card debt that's going up to 50,000 rupees. Your emergency has already begun, and the money that you're saving has really no effect on the long term whatsoever. So that would just be one small argument, and that's something people should think about before they start initiating the idea of saving up for a rainy day.
Okay, I guess that's a fairly good point. I mean, the sample size will definitely be pretty small in a country like India because, one of the things I was going to say is an emergency fund is, first of all, to be in a situation where you can think about whether or not you want to have an emergency fund, you should be a high net worth individual. And I think not having an emergency fund only works for people who are high net worth individuals, because if you look at some of the alternatives of where you might get money from if you have no cash lying around, credit, mortgage your house, things like that, this means essentially that you'd have to have a high credit score, you'd have to have a house that you can mortgage, and no other debts that you have to pay off. So this sort of thing will definitely only apply to a small group of people. So I guess that's a fair point to make. But having said that, I think in a country like ours, where the attitudes towards finance and money tends to be more on the conservative side, it's going to be a tough sell to sort of explain to people why having no emergency fund at all is something that's beneficial to them, because I think it's quite evident that we're a country that really likes to save. We spend a lot of money on gold, we keep that at home, and I think only until recently we started investing. So an emergency fund, a $0 emergency fund or a 0 rupee emergency fund, I think in India would definitely be a very tough sell.
I agree with that. And I think you brought out a very important point about people in India being very conservative when it comes to their finances. And I think that brings up another important point, that I genuinely feel that there should be a fair amount of financial education to people in India. And I don't necessarily mean that when it comes to financial markets, but I mean that in general about personal finance. And if people were educated on personal finance in India, The main argument behind having this emergency fund is liquidity. That when I need money right this instant, or when I need money within the next 24 or 48 hours, I can have it at my disposal. And maybe 50 years ago in India, a savings account or a bank account would be the only way to have that liquid fund. But times have changed, and as times have changed, we now, the retail investor in India or the common man in India, has access to a multiplicity of investment opportunities. And a lot of these investment opportunities are liquid in nature. Unlike a general savings account, they will help your money catch up to inflation. And they are just as liquid as that savings account. The biggest example of this is a debt fund, which is similar to a mutual fund. But unlike a mutual fund, it will give you slightly higher rates than most bank accounts. Unlike fixed deposits, there really aren't any exit loads or there aren't any charges to break it early on. And you can have access to that money within a 24 or a 48-hour period whenever you need to. So I agree with you when you say that people are conservative about their finances, but being conservative about your finances isn't really an excuse to sort of be ignorant about the opportunities that are out there. And I think that education would really help people understand that.
Yeah, no, I definitely agree on the education point. I think most people in this country, I suppose that's changing now, but at least for a while, the concept of money itself, I think they didn't really look at some of the opportunities that you had. I mean, part of that has to do with the fact that our economy itself only really liberalized in the early 90s. Right. So it's still a developing thing, the financial services industry in this country. But you brought up the point about debt funds and the short term, they're very liquid. So if you do need some money, that's something you can pull out of, and you can have money pretty easily. And obviously you have other lines of credit, and all that's well and good. But I think one important thing to consider: an emergency fund is for an emergency, and you could have a recession, you could have something like a demonetization happening. In which case, you can't really predict what's going to happen in that situation. If you're in a situation where it's demonetization, I mean, I'm sure everyone remembers how difficult it was to withdraw cash, and we have to remember that this country is still very much a cash economy. Most of our transactions happen in cash, so people may feel uncomfortable with digital transactions, online transactions, whatever that may be. They would still like to get their hands on some solid hard cash. And of course, the other point is during a time of a recession now, because of the way our financial system is structured, we are pretty well protected against a recession situation, just because of the fact that we're quite risk averse. Okay. So we tend not to be as risky as, say, our Western counterparts. Right. But if you were to be in that situation, like what was going on in 2008, where you had the banks failing, your house wasn't worth anything, right, and people were losing jobs. In that particular situation, when there is really little scope for liquidity, right, or credit or whatever that may be, in that situation, having, say, 5 lakhs, 10 lakhs, whatever it is that you choose to save up, could actually help you out quite a lot.
Definitely, I agree with that. And as I said, there are very few arguments that I could give you that would basically make sense for people in a country like India to not have an emergency fund. More often than not, as most financial planners would tell you, it makes a lot of sense to have 3 to 6 months of your income set aside for a rainy day, for whatever reason that might be. Your car might be damaged, you might have certain emergency health costs, there might be a cash crunch in the economy. But the reason I bring up certain arguments against having the fund is for a very niche group of people. And if you are in that group of people, there are multiple reasons why you might want to invest your money elsewhere instead of just simply keeping it in a savings account. An example of that would be if you're in a dual income family. So if you're in a family where both you and your wife are earning members, or you have multiple lines of income every given month, then what you've done is you've unintentionally hedged your emergency risk over a period of time. So if you lose your job tomorrow, you know that there's one or two other earning members in the family who can help you out in that given situation. More often than not, employers in this country are slowly and steadily beginning to offer full coverage health insurance for workers as well as their extended families. And that helps you out, because maybe tomorrow when you go to the hospital, medical expenses are very high. And in these situations, health insurance will help you out significantly more than saving up about 3 to 6 months of your income will in a certain situation. So these are just some of the examples in which you can do a lot more with your money than just simply keeping it in a savings account. Because interest rates in India currently for general savings accounts are terrible. And when I say they're terrible, what I mean is I don't see them catching up to inflation rates anytime in the near future. And so if you are under the group of people where you may have multiple lines of income within a given family, where you may have health insurance, where you might even have unemployment insurance, where you have automobile insurance, if you've spent money every single month on these certain risk-averse policies, then I think it's better for you to take whatever else you have remaining and diversify that across a investment portfolio rather than just have it sitting in a bank account. At the other end of the tangent, as you mentioned, if you are from a family where you are the only earning member, there's one single earning member, if there aren't a lot of liquid investments that you're involved in, it definitely does make a lot of sense to have a certain amount of your monthly salary every single month. Just keep it in a savings account for a rainy day.
Well, yeah, I think we could probably conclude this by saying that there are definitely strong points on either side. The point about more and more women in the country are working, so there is invariably going to be more
Correct.
than one earning member in a family. So I guess as we move forward, as we progress as not just a country but as an economy as well, we might be able to get to a point where we're more financially literate, and therefore we can make decisions like this in a more, say, comprehensive way, and in a way that where we can hedge our risks. So even if we don't have any money lying around as an emergency fund, there still could be other avenues to get some cash or some credit if you need it. And hopefully it won't have to come to that, but I think this has been a pretty good discussion about this particular topic. Strong points on both sides.
Definitely. So thanks guys for listening to our first ever podcast. We genuinely hope we could provide you with some level of insight on this topic. If you have any recommendations, feel free to post on our social media pages, and we hope you join us for our next podcast.